going on, boys? It's Charlie here with another video. This is going to be a weekly recap. This is going to be the last week of January. Gosh, bro, this camera keeps flickering, boys. I'm sorry. Just deal with it for like 45 seconds. I don't even know if you guys can see it. But anyways, regardless, this is the best week I've ever personally performed in trading. P&L was like good, of course. You know, I ended the week profitable, but more importantly, I filtered out a lot of bad setups. 8%. 8 losses is what I filtered out, and it should have been 10% because Tuesday I took 2 trades. That was pure human error. Should have never taken those trades. So futures again, absolutely 8 this week. And yeah, that's pretty much it. I'm just going to show you guys exactly all the trades. A lot of people are obsessed over this fact of taking normal LSD. Like, if it's trending and it takes liquidity and taps into a demand, take the trade, right? No one's looking at outside factors. This is really pissing me off. Okay, no one's looking at outside factors. I'm just going to talk on here. I don't know if it still flickers. No one's looking at outside factors, okay? A lot of people's just looking at, did we take out liquidity or are we trending until we tap into our demand? Yes, and they're taking the trade and they're getting cooked, and cooked, and cooked, and cooked. People don't realize if it was that easy, everyone would be profitable, right? It's going to take some outside factors. Like, literally, the creator of this strategy, RD, literally took 2 trades in January and he's profitable. 2 trades. 2 high-quality trades. Again, he didn't start until January 15th, so he's only been trading 15 days. Took 2 high-quality trades. Boom, end of the month profitable. Show month for him, you know? So, like, and I used to be guilty of this, is taking every single trade because, yes, it's valid, it's valid, it's valid. Don't, like, let your emotions, like, and your fear, like, skip out on this trade. There was trades that was clearly, like, valid, but, like, I just didn't like them because of outside factors, and I would be sitting there and I'm like, no, I have to take this trade because I'm letting my fear skip this trade. That's not the case. You're letting your market experience and your intuition skip this trade. Not fear, not revenge, not all of these things that people talk about. It's purely market experience, and it's purely, and not even so much market experience. Like, yes, it plays a major role, but also just looking at higher time frames and understanding where the draws or liquidity are. What prices are we chasing to? You know, are we bullish, bearish? Are we in a reversal? Are we in manipulation? Like, all of this stuff, and then include your LSD model inside of it. I don't want to go into too much topic because it's a lot of, I don't know how to explain it, guys. It's a very deep concept. I don't want people thinking LSD is just not LSD, and we're trading a completely different model, but I'm just saying look deeper into trades. But yeah, that's what I'm going to be doing going forward because, like I said, I had my best performing week. This was Tuesday. We're going to start with these 2 trades that I should never take, and I'll show you why. There's these 2 right here. No, I lied. There's these 2 right here on Monday. And this was the only good trade for this week. Every single one of these I skipped and they lost. And there was a gold trade today that was absolute horrible, and it did end up actually winning. But again, it was a bad trade. You normally never take it. And again, skipping out on bad trades and when they win is way better than taking bad trades and they win. And now your brain is absolutely fried because you're like, okay, if that setup won, I can take all these setups that are valid. Guess what's gonna happen? This right here. Loss after loss after loss after loss, blown account, buy a new one, loss after loss after loss, and then boom, you finally hit a trade off a horrible setup. You're like, oh yeah, it was market conditions. We're back on the game. What happens again? Loss, blow the account. That was me, bro. Like, that was literally me. Like, and I'm saying this from experience. I'm not just saying this at random. So let's start this week, right? What do we have? We have Euro USD, 5-minute time frame. Okay, if you guys are new, the outline of the strategy is if we're trending, we're going to look for a liquidity sweep and a rejection level to the left. And when we get a rejection level, we're going to look to short and in continuation of the market. Okay, position would be right there. Take profit down here. Okay, that's the rough outline of our strategy. What do you have here? Same thing. Level liquidity, lows, and right here. That's our entry candle. What could I have done to avoid this? First of all, wait for a normal entry candle, or entry model. This is a valid entry model. It's not like I just entered at random. This is a break of candle entry model. The thing is, EU is our worst performing pair, and to take a very aggressive entry on our worst performing pair at almost within the last hour of our session. Is that the best thing to do? Probably not, okay? NQ, that's a little different. NQ, gold, very volatile, especially on demands, right? They're always reacting strong, aggressive from demands. This is just our worst performing pair late in the day, taking a risky entry. That's honestly the main point of this. If we would have waited for a candle close, we wouldn't have even taken this trade. That honestly, I can't go too much more into depth besides that. That is the main thing about this. Another thing is we're obviously trending bullish, okay? At some point, this internal retracement is going to continue bullish, okay? We know this, right? So what is price doing? Price is tracing down, taking out sell side liquidity, retracing. What do we take out? Buy side liquidity right here. Okay, boom, take out buy side liquidity. What are we doing? Taking out sell side liquidity. What are we pushing up? Buy side liquidity. Is that liquidity strong enough, ask yourself? Or these highs right here, or these highs, or these highs? You know, this first high right here, we're pushing up with a lot of volume. We just kind of filled this gap right here to the left. We could be aiming for a higher buy side liquidity. Is it really smart to enter an aggressive entry on your worst performing pair that late in the day? It's just all those factors, right? It's beyond just looking at, did we sweep liquidity? Did we get our entry candle? No, look at the outside factors, guys. Yeah, so probably gonna target higher buy side liquidity, and we know we're bullish overall, so what do? Targeted outside buy side liquidity, this liquidity, this liquidity, this liquidity. Retrace, what do? Target more buy side liquidity. It's over and over. That's all it is. So again, I'm not trying to go too deep into this because this is something I'm currently using. There's no one else in the space that's using this at kind of the level I feel as I am, right? There's fundamental people, and I'm like looking into that too. But as far as percentage wise, there's probably 5% of us even doing this in the liquidity supply and demand space. There's not a lot of people doing this. So yeah, that's pretty much it for this trade. Simple, stupid position, whatever, human error, okay? And this is kind of, I started looking into this heavily on Tuesday, I'll be honest. No, mostly Wednesday. Tuesday and Wednesday, I started looking into this heavily. At this point, I was still like, I don't know how to explain this. I was still, previous months, I had August, September, and October. I ended those 3 months profitable. November and December was a lot rougher, and I didn't understand why. And it was getting to a point where I was doing a lot of back testing. Okay, I was getting instant trades, and you take that to live markets and you start realizing you don't realize how many trades you actually pass up in back testing when it comes to live markets. So anytime in live markets you get a valid trade, you're taking it. And those trades or those months don't end up the best, right? And same thing kind of started with January, and then I was like, wait, why is no one looking at these deeper levels and why the market moves the way it moves? I need to do what I was doing again previous months. So I started doing, boom, everything clicking back in. It's crazy. But yeah, that's pretty much it. Just looking into stuff deeper. But yeah, that was that EU trade, why I skipped or why I took that position, but it was stupid. UJ, candle close. This one, liquidity was absolute garbage, okay? Absolute garbage liquidity. So what do we have here? Okay, so this, literally this, that's the zone, okay? That level of liquidity, do you think that's really major to sweep realistically, especially when price came down this choppy, moving just, if it's a strong level of liquidity, it's gonna take it sweet, quick, and move. As you guys can see, this is a strong level of liquidity. What did we do? We swept it strong and moved, okay? If this was a strong level of liquidity, we would have swept it strong and moved. What do we do? Up and down, up and down, up and down the whole way. Then we get our one bullish candle, and then boom, straight back down, okay? So that is that. That's that trade. Again, you have kind of even buy side liquidity here. Price is gonna want to target these. And price is very overextended, right? Very overextended to the downside. What do we start doing? Price putting in lows, putting in highs, putting in lower lows. Now we just took out this most previous high, matched with even buy side liquidity, price retraces, yes, we're probably going to sweep liquidity and continue to the upside, right? That's what we're going to do. But then you have to sit and ask yourself, is that liquidity even strong enough? Is that a good level of liquidity to be buying from? That's kind of garbage. And again, I told you guys how it came down to that zone, mid, very mid. But look at this. Look at this nice level of liquidity right here. A lot of accumulation. That's where orders initially shot up from. So there's probably a lot of supply, or there's probably a lot of liquidity that's going to be sitting under here. As you guys can see, even faked out people getting into demands right here. That was me. And stopped out. Boom, boom, all that liquidity. Now we have liquidity generated to continue to the upside. Okay, that is how that works. 100%. That was just 100% human error. But now we get into the good stuff. This is from trades that I skipped, and it's pretty crazy. This week we had so many setups pop up, and they just look like A+ setups, and it was just losing and losing and losing. And I'll show you guys exactly why. Let's start with Tuesday. We had our gold position on Tuesday. Okay, this is it. Tuesday supply. Okay, so main reason you skip this is purely because it's a supply zone on gold. I'm not even gonna lie to you guys. That's literally the main reason we skip this right here. I really can't explain anything else. I thought this one was actually a little bit in depth. It's actually the next gold trade that's more in depth. This is just why, look, supply zones on gold just are not the best. I don't know what it is. I can't explain it. It's just whether they're always bullish or they just get wicked out and continue in your area. It always seems that way. So let's dive in here. Let's see what we're doing. So I never even actually looked at this trade again. So I'm kind of doing this live with you guys because I didn't, normally these trades I kind of go back and look on, but not this one. Oh yeah. Okay, boom, simple stuff. This is what it was. So we have, okay, I'll keep that. That's the supply zone right there. So what's price doing right here? It's 15-minute time frame. What's price doing? Accumulating, right? Sideways, bunch of sideways movement, accumulating orders. If we want to move to the buy side, probably need to take some liquidity below, don't we? Well, we have even lows right here. We also have lows right here. Okay, so where are we gonna retrace to? Probably either this where price is imbalanced right here, or maybe this demand zone or something like that. Okay, and you guys know the power of three: accumulation, manipulation to the downside, sweeping all these liquidity orders to continue to the high side, fill in imbalances or tap into a demand zone. What do we get? Manipulation to the downside. Stopped out all these orders over here, all these orders over here, filled in this imbalance here, and what do we do? Start getting bullish price action. So what do we get from there? Displacement to the buy side. So when you're in this position right here, ask yourself, should I be shorting the market when we're in displacement to the high side? On top of gold. Realistically, gold, come on. Gold is absolutely bombing to the moon right now. No. Why would you be taking sells right there? Even though, yes, we did actually, you would have kind of lucked out and got a little retracement here before we continued up, but it still stopped you out. So it does not matter. It does not matter at all. Is that a smart position to take? No. So it's just all about looking at these things right here. By the way, I'm dropping way too much sauce. No LSD, no person teaching LSD is showing you this, but I gotta chill. But yeah, that's where we at here. Friday, Tuesday. Yeah, that was this position, guys. And yeah, you can see it. I mean, even for us to go down, we're gonna take liquidity to move to the high side. What do we have? Buy side liquidity here. Buy side liquidity here. Okay, boom, 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 boom. Take out buy side liquidity, all these, fill in this displacement, and boom, to the high side. So again, main reason was it's a short position and the exact same thing I just showed you on this higher time frame. You can actually see it on the 5-minute time frame pretty much. Accumulation, manipulation to the downside, displacement to the upside. Now obviously the displacement isn't gonna be straight up, right? We're gonna have retracements, obvious. But in those retracements, why would you be shorting when we're bullish overall? That's why what I'm talking about, using your higher time frame stuff to your advantage, using your like experience and what you know about liquidity to your advantage. So make sure this thing's still recording. Hope it's not like flickering, bro. Should be good. Okay. Gold. Wednesday. This was this next position. Guys, I made a YouTube video strictly on this trade. Please just watch that because I explained it so deep and I really don't feel like doing it again. But this is the rough outline, but this is just the deeper reasoning behind everything, okay? I aim for a 1 to 3 on this trade because of my topstep account, first of all. And I'll explain why 1 to 4s didn't get hit. First of all, this had heavily to do with fundamental stuff. There's a Trump tweet and there was something else that came out around this time which caused a lot of movement. But regardless, demand right here, level liquidity, price came down, right? Where are we targeting? Price moving up from here. Where are we targeting? Probably buy side liquidity first, if anything. Right here, we have buy side liquidity. What do? Take buy side liquidity, we start moving to the downside. I just missed take profit, by the way, right there, which you know, I posted on my other YouTube video. At this point in time, I was gonna go break even, right? I was like, okay, I'm gonna go to break even. I just missed my take profit. I'll probably get a break even. Well, I looked, I said, hey, okay, wait, if price is retracing, we're probably gonna take out sell side liquidity first before continuing up. Well, we have a major low down here, but we also have a double bottom right here. There's 2 nice liquidity levels right here. Price could potentially just take that sell side liquidity and continue up. Potentially, right? It'd be different if we just moved off and we had no sell side liquidity. Price was coming down super strong. Where are we targeting? Buyers could just kind of come in at random and push price up, or the most likely thing would be to target sell side liquidity, which would be our stop loss. So I would definitely go break even then, but we had sell side liquidity right here. I was like, price is probably going to take out all these orders under here, and it did. Moved up. This was just New York open, so that's just standard volume. Pushed up. Where are we targeting? Buy side liquidity right here. Boom. What's our next target? Buy side liquidity right here. Boom. Take out buy side liquidity. Fundamental Trump news stuff comes in. Boom. Ruins the market. But where are we targeting though? Realistically, where are we targeting? Buy or sell side liquidity, which is right here. Stop people out. Boom. Up to buy side liquidity. It's just ping pong, guys, between these 2 levels. So that is the reasoning behind that. I couldn't quite get out at break even because I saw this was happening. I was like, I know exactly where it's heading to. I couldn't quite get out at break even because I was trying to log into my broker. So, but yeah, topstep futures, I hit TP on all these on this trade right here on multiple accounts. So yeah, that was pretty sick. But yeah, that's some reasoning behind that trade. I have a full like 20-minute video going over that gold trade. So watch that. Wednesday, NAS 7 a.m. I don't remember this trade. Yes, I do remember this trade. I lied. Went over this also in my YouTube video. Right here. Okay, so I should not be dropping all this sauce. I'm just gonna remove that. I will save that for later. Anyways, we have demands right here. Move up, retracement, move up, retracement, move up, retracement. Now tap into your liquidity zone and enter buys and go to TP, right? That is the normal core thing of LSD. What no one's telling you is because you have to look deeper on these markets. What happened here? Well, I watched this candle live. Okay. All right, boys, you're gonna have to trust me on this one. Go look at my video yesterday. Prices were up, or brokers were up to update their prices. This was not tapped yesterday. I swear on my mom's life. I swear right hand up to God. You guys can literally go watch my YouTube video yesterday because I go over it. This was not tapped yesterday. So yeah, it was not tapped yesterday. I promise you guys. Of course that happens when I'm recording this video. But literally, if you don't believe me, go watch yesterday's video. I showed you guys. Anyways, live markets, I watched this. And price came down, swept liquidity, didn't tap into our demand zone, pushed the whole way back up, and literally almost closed that candle as bullish. Almost closed that candle as bullish. So, what do? We almost closed that candle as bullish. We took out all of our liquidity, which is the main point of our strategy. Our main point of our strategy is to take out liquidity, try to specifically find where price is going to be reacting from after taking out that liquidity. Well, if we just took out our liquidity, didn't tap into our zone, and moved the whole way back up, and failed to move up, why would you think it'd be a good idea to enter after we swept all our liquidity, moved up, failed to move up, now we just kind of come down and fizzle into the zone? people entered on this because they don't understand. They're looking at simple rules. You enter long position, stop loss. What'd you do? Kind of fizzle up here a little bit, and then boom, straight to stop loss. It's all about liquidity. That's literally it. That's what the market drives on. That's what fuels the market, literally. So yeah, that's the reasoning behind that. Again, I am saying a lot of stuff right now.
The market is open.
This isn't, I'm not going to do this all the time on YouTube. This is going to kind of be a one-time thing. I'm just explaining my thought process behind these trades. But this is stuff on a really deep level that takes a lot of studying, but no one's teaching this in the LSD space, realistically, right? We're just teaching, hey, we have liquidity, boom, retracement, order, take profit, okay? There's reasons behind this stuff, and that's kind of a reason that goes over people's heads a lot of times. Now, sometimes trades like this can win because it's just kind of reacting from a demand zone, right? And it's just kind of fizzles up to take profit. Yes, they can win, but more times than not, they're gonna lose. So again, we took out liquidity, moved the whole way up. We did our main move, and then we come down 10 minutes later or 15 minutes later, and we get a horrible entry candle with a massive upper wick right here. Okay, so then you take that position, and wow, you got stopped out. That was kind of surprising. Okay, so that was that position. That's why I didn't take that position. I was also in gold within that same time. So Thursday, wait a second. Okay, yeah. Wednesday, Thursday, we had GJ, NAS, gold, UK 100. Gosh, okay. All right, let's look at GJ first. I don't remember this trade at all. Yeah, I do. I guess I do right here. This, what was the reasoning behind this? I just personally didn't like how we pushed up, right? We had our nice level of liquidity. If we would have pushed up really strong and then retraced, yeah, that's cool. But we pushed up and we just kind of consolidated up here, right? We had so many wicks that we tried to break all these highs and we failed. We finally got a little tiny candle close at the last candle, and then we moved down. I just feel like this isn't a big enough move for people to stack in a bunch of orders to then put their stop loss under here. I don't feel like there's enough liquidity under there, I'm not gonna lie. I feel like we want to target liquidity and continue to the upside. You know, maybe stopping out these orders right here would be a good idea. Which, yeah, we did. We literally stopped out these orders and moved to the high side, right? And price did actually end up reversing from here anyways. Let's go in the higher time frame, see what we're working with. Just a bunch of chop, realistically. Kind of just some sideways movement. You could even see how, yeah, we were putting in higher highs, higher lows, higher highs. We could be expecting a retracement. So why would you be longing right there? You see what I'm saying? So yeah, just some, again, outside logic about these trades. And then that's pretty much it. Yeah, not too much more to go over. Just kind of an ugly trade I didn't really like. I skipped on this one. Entry candle was mid and it just straight up stop loss. So yeah, that's pretty much it behind that trade. This wasn't actually in my time frame, but people did take this trade, so I noted it down. 355. This would have been actually an hourly candle. So if you would have been smart, you would have waited for an hourly candle, which would be this right here. But still, you probably would have got in on that break of candle on that hourly candle, and then got stopped out. So yeah, okay. GJ NAS. Another trade on Thursday I skipped. I don't think that was the trade, boys. I'm not gonna lie. Oh, wait, what the hell? 6:05 a.m. I have. Oh, wait, I'm retarded. Okay, demand zone. Gosh, I thought it was a supply. All right. Now, normally I take buys on NAS 100. Why didn't I this time? Well, this wasn't tapped, right? Okay, it wasn't. No, it wasn't tapped. Very close, but it was not tapped. Yeah, so what are we doing right here? We have accumulation at the top, probably gonna manipulate lows and continue down. Take out all these orders or take out buy side, do something along those realms, right? Accumulating, what do? Is we start trending down, right? Putting in lows, putting in higher, or putting in lower highs, putting in lows, and to be honest with you guys, I just didn't really like this trade. I don't really know how to explain it. We failed to take highs. We just kind of rejected at this level right here. Nas, look at this. What is this? Explain to me what this is. The price action is really retarded. I'm not gonna lie. Price action is really retarded where over here you just had nice clean trending markets. Of course there's positions, right? Even down here, trending down, it was still pretty nice market conditions. What is this? What is this retracement? Now we're trending down. Does anyone know where the market's going? No. Okay, that's pretty much the core reasoning behind why I didn't take this trade. Liquidity was really relatively small. It's different if we would have had all these stacked up orders right here and boom, manipulate to the downside, tap into a demand zone, which we actually had right here, except it invalidated and ran up. That would be different, right? But price obviously, is coming down, putting in lower highs. Tap into our zone. Liquidity is kind of mid. Again, this would have been a lot better to just take all those orders and run up. And on top of that, price actions, or not price action, higher time frames just kind of cooked. What even is this? Literally, what even is this? So we're just letting it go, and we just ended up displacing massively to the downside. Yeah, so that's that. Thursday, gold. Another trade on gold Thursday. Okay. I need to start saving these positions, guys, because I don't know. Thursday, gold. Thursday. Where are we? Is it this trade? Oh yeah, it was this trade. It was this trade. Okay, bet. Okay, I don't want to get too much, I don't want to leak too much stuff right here. I'm not gonna lie, but main reason I didn't take this trade was there's SMT or something like that. I don't know who said that, but there might have been something like that with these highs compared to silver. I don't know. It was just a bearish sign I had in mind. And yeah, this demand zone was absolutely massive. If I would take out highs, gold's overextended. We love gold and we love buys, but there gets to a point where it gets so overextended. At some point, we're gonna correct this move right here, okay? And to be honest, that's why I didn't really like this trade. I'm not gonna lie. There might have been something with these two highs, and this zone was pretty big. And again, your stop loss would have been absolutely massive. So targeting 1 to 4, you're targeting crazy highs, whole way up there, as we're already expanded way too much. Okay. And yeah, that's pretty much it. Price tried moving up, tried taking out highs, right? Start coming down to the downside. Where's our sell side liquidity? Right under these lows. What do we do? Boom, gets taken out. What do we do? Come up. Where's buy side liquidity? Boom, right here. Buy side liquidity. Did we get taken out? Well, eventually did get taken out right here, but there's more buy side liquidity right here. Boom, gets taken out. What do we remove? Sell side liquidity. Boom, takes out these orders. Comes down, takes out these orders. We just had a massive market correction. I just had a sense market correction was incoming because something with this and gold, or this gold and silver correlating, and this demand zone being just massive, stop loss absolutely massive. It's just not a trade I'm really willing to risk money on. So that was that trade. Skip that trade. So yeah, UK 100, I have a video scheduled for Monday coming out on this trade. I'm not going to go over it that much in detail, but very deep market analysis. I literally made this video when price was right here, and I called it to a T. I literally said if we're going to continue to the upside, we're probably going to have to take a bigger level of liquidity, which would be these lows right here before continuing. What do? stop everyone out of these orders, stop everyone out of these orders, and now we're continuing to the upside. I didn't say, like, price could take out these orders and continue down, yes. But if it is gonna continue to the upside, it's gotta at least take out these orders first. And that's still under our stop loss, so like, it's gonna stop people out. This was an A+ setup in a lot of people's eyes. Yeah, I don't really know how to explain it. It's just really deep understanding of liquidity. I've been studying this so much. Again, I don't want to go over this because it's going to delete the purpose of Monday's video, but I literally explained this entire trade to a T, what these levels have to do, what these putting in higher highs higher lows have to do, and yeah, the higher time frame, all that stuff. So I'm just going to leave that mostly for Monday, but it's a really, really interesting video because I actually did my analysis before this trade even happened on telling you guys exactly what I think is going to happen. I was spot on. So now Friday, NAS shorts, UJ shorts, and then there was gold shorts, which was, that gold trade did actually end up hitting, but that was a horrible, risky position. NAS shorts. Okay, right here, NAS shorts, it's mainly just NAS. Why I don't want to enter on NAS shorts, I'm not gonna lie to you guys. There's really no strict reason, on top of, I guess, liquidity is pretty far away, to be honest. Strong liquidity, yeah, but liquidity is pretty far away. I don't know, I just feel like it's a mid-supply zone. You know, we had no rejection, but where we target buy side liquidity, right here, you guys can see. Let me draw a more straight line for you, gosh. Okay, buy side liquidity just stops people out, boom, to the downside. Where are we targeting? Sell side liquidity, right here, boom, targets that. Where are we targeting? Buy side liquidity, right here, boom, targets that. Did we take anything to the left? No, that was it. But it's literally just that over and over again. But I felt, this is how I felt, and I felt the exact same way on gold. Friday, we have this massive correction. No one knows where exactly we're gonna reverse from, right? And usually when we come down like this, price is gonna heavily, sorry guys, I'm mixing up my drink here, and my protein shake. When we sweep liquidity and we start to move up, price is gonna accumulate at the bottom to most likely generate some orders or do something to push price to the upside, whether that's liquidity sweeps, generate orders, accumulate sideways, whatever. So trading within these times right here is where you want to be, right? Price is retracing, cool. You could catch retracement trades, that's cool, except we came down in one massive candle, so that's quite literally impossible. But when you get down here and you start bouncing and you start trying to figure out where price wants to continue to the upside or maybe go lower, there's not much trades you can catch here. And the trades that you're going to see is very, very risky because no one really knows where price is going. What I saw is, hey, NAS corrected, right? We took out all of these orders. Most importantly, this was the most recent low before all of this buying pressure came in. Massive stop loss orders under here. So we took out sell side liquidity, right? Boom, literally 2AT. You can't make this up. You can't tell me this isn't done on purpose. Takes that out perfectly. Retraces about halfway up, and it comes down, and then we just start consolidating, guys. And we know this is going to consolidate until we start picking a side and continue trending up, or we might continue trending down, right? Trades within this range is very, 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 very risky. No one truly knows where it's going to go, okay? You can say, yeah, we just took out highs, but it's really just liquidity sweeps. Back and forth, back and forth, back and forth, until we start truly trending in one direction. And we know that our higher time frame, we're bullish. You know, we're kind of waiting for this to really just kind of give us a clear direction on what we're gonna do. So trading within this chop, kind of mid liquidity, it's coming up, not even really that clean, and you're just gonna get a standard. I don't think enough people realize this. I'm about to drop some sauce. When price moves up like this, guys, moves up, retraces, moves up, retraces, moves up, retraces, moves up, really extended, we're gonna get a bearish entry candle right here to retrace. And then we're gonna be like, oh, it's going in our direction, boom, straight to stop loss. It happens all the time. So that was kind of my take on that. It's risky, bro. Like higher time frame, it's doing a bunch of stuff on a Friday. Let it be, okay? Literally let it be. Why are you trying to take a bunch of random, horrible, low quality positions in here. All in this area. What even is this, bro? Same thing on gold. Gold had this position and it did end up winning. Gold's actually displacing a lot lower to the downside than NAS is, but where was this trade? Right here it was. Let me mark this out for you guys right here. This is the last trade of the week, by the way. So this is the last one for this video. How long is this? 35 minutes. Damn. Okay. So we have our level of liquidity here. Let's talk about a few things. So first, sells on gold. Is it risky? Yes. We're literally bearish for like 2 days of the month. It feels like right now for the last year. Okay, it's barely even bearish. You're always taking buys. So that alone should filter out 75% of your trades. What are we doing? Are we clearly trending right here? Yes, we are. Okay, right here. Yes, we are. You know, we're taking out lows. We just have this major low taken. Now we're moving down. Did we take out this major low yet? Not really, you know, so keep that in mind. We're reacting strongly kind of from this demand to the left. Price is pushing up and we tapped into a zone. It's mid, okay? Look at higher time frame. What are we doing? Well, same thing as NAS. We're displacing to the downside, but what are we doing to generate orders to the high side? Now at this time, guys, keep in mind this candle was not down here, okay? It was just this wick right here. So I look and I'm like, well, massive major level liquidity is going to be under these lows, under these lows, under these lows. These mid is really not going to do anything. As you can see, we got an initial bounce from it where we swept this liquidity, and we got this bounce, rebalanced. Now we're going to come down. What do we do? And this was my thought process behind it. It's coming down, tapped into this area of accumulation while simultaneously sweeping these levels of orders. And what did I think we were going to get? A rebalance to the upside. Boom, rebalance. And then from there, maybe we'll continue down, maybe we'll consolidate, build up orders, and then continue the upward trend. No one knows, but I'm just showing you what the market is telling me. So when we're in this rebalance phase, does anyone know what's really gonna happen? You know, are we bullish, are we bearish? No one knows. So don't be trading in those times because it's gonna build a horrible habit on your psychology. When you're taking these bad trades and they hit, now you're more likely to incline to keep on taking these bad trades. I can promise you guys it's horrible long run. I've literally been through it. I've blown accounts. I know exactly what it's like. And this is truly the core reasoning behind it. It's like this with every single strategy. People think it's just LSD being bad. It's like you're not using outside other factors to your advantage. So yeah, this was just kind of simple one to skip. Entry candle was right here. The best thing you had going for this trade, even if we didn't continue displacing to the downside, the best thing you had is we had kind of this entry candle that was not really good at all because we had a really strong rejection. But the 1 to 4 was really, really, really small. So even if we did consolidate right here, then anyone taking this trade literally could have got TP hit pretty easily. And even if we displaced to the higher side, a 1 to 4 is really small. It's not like we're targeting, way down here under these main lows, which yes, it did end up displacing lower, but we didn't know that until now, right? So yeah, risky trade. And you guys can see after, again, skipping 10 losses, you might get that one trade that it's it's a bad trade to take, but it hits, right? But then you'd look at my weekly P&L, still cut out over, what would that be, like 5%, 6% of profits? Or it still cut out 6 losses, I mean. Like, it's crazy. I really don't know what else to explain. This is literally what I used to do, and it's just really clicking with me really, really well. How to decipher these trades. And I know it looks like I'm kind of talking a bunch of like nonsense, but I'm telling you guys, look into how markets move, look into how liquidity or markets generate liquidity to go on runs, to go into certain directions. Look how we have to target next level liquidity before we can fill in orders. It's pretty much the core reasoning behind why the markets move the way they move. But again, going into this trade, any at a deeper level, yeah, this is bearish, right? You can say this is bearish, but is it really smart taking trades in this time frame as it's Friday, it's late in the day, we just took out major levels of liquidity, tapping into the zone of accumulation. We have a massive rebalance coming in. Do you know where market's going? Are you 100% certain on trend? You know, is that higher time frame lineup? No. Why are you taking trades in the 5-minute time frame? Why? Maybe you want to make some money, make some trades. I don't know. But to me, it was just kind of a greedy position. It's kind of a stupid one to enter. It's literally the last 30 minutes of our session. Friday, short position, but whatever. If you hit that, good for you, got some profits. I would just recommend don't do the mistake again, because I used to do this exact same thing. I would take trades and they were bad quality. People would tell me, hey, that's pretty bad quality trade. Like, you know, congrats, you hit it. But I'd be like, oh, no, that followed all the rules. So, you know, I must be doing something right. So next trade comes, follow all your rules, and boom, you lose. While someone else is just sitting back, kicked up in their chair. They see maybe one position, two positions a week that are, you know, great. They line up and they take it. Maybe they hit one, lost one, cool, end the percent, or end the week with 3-4%. While someone's over here taking multiple losses. It adds up, and that was literally what I used to do. So yeah, that's pretty much it for this weekly recap. I know I yapped a lot. I explained so much that I don't think anyone really talks about besides the core concept, the most basic concept of this. Yeah, we swap liquidity, tap into demands, and boom, buy. There's more to it. Okay, there really is more to it. And I'm still learning every single day. So that pretty much wraps up January, guys. I might do a January recap. I don't really know, but February I'm super excited for. Super excited to just take all this with me into February. And yeah, see where it gets us, boys. So that's pretty much it for this YouTube video. Hope you guys enjoyed it. I'll make this bigger. And yeah, that's pretty much it, boys. So I will catch you on the next one. I have a video posted on Monday, or a video scheduled for Monday, talking about the UK 100 trade that mostly everyone actually I saw really took the trade. Again, besides some of the mentors in the space, because, you know, maybe they know how to use market experience to their advantage. I don't know. Or maybe they just didn't see it. I really don't know. But actually, I don't know if mentors skipped it or not. I think some mentors did take it. I don't really know. But anyways, regardless, that video I have scheduled. I literally recorded it before the trade happened. So you know I'm not like messing around with you guys, or I'm not joking. I literally said what I think's gonna happen, why it's gonna happen. And I, again, said I could be totally wrong, right? And you're not gonna be 100% right in this game at all, right? It's all about probabilities. So, okay, I'm done yapping. 43 minutes, gosh, I'm sorry, boys, but I hope you learned something. I really do hope you learned something. If you have any questions, just either DM me, message me on Instagram. Gosh, my screen's lagging out. Message me on Discord, or just leave a comment. So, thank you guys for watching. I will see you on the next one. Peace.